Welcome. Godric here, your stock market mentor, coming to you just past midnight, Tuesday, December 4th, 5th, 2023. Welcome. I feel like I can't get peace until everybody goes to sleep. So I've been coming on late. Sorry for being so late, but got a couple of good nuggets for you tonight. Make it worth your while. We're going to do short and sweet. Let me get my calculator up. Good evening, good morning here. Godric, your stock market mentor. I'm going to show you a couple of covered calls tonight, maybe 3 covered calls, 3 stocks. I got my calculator here because math matters. Do some math. And okay, guys, welcome. We're gonna do short and sweet tonight. Come up here every Monday night or early Tuesday. Talk about the stock market, about stocks, and about some positions, how to make money. I'm gonna give you my choice stock picks right here. First one's Roku, ROKU. Well, first let me do the basics. Dow Jones down. Sorry, I'm gonna get guests. Not today, but I'm gonna get guests soon on my panel. We can talk about the business, but for today, if you can just ask questions in the comments or message me, I'll get to your questions. Or if you have a decisive question, I'll do my best to answer. I have a presentation prepared, so let me just do the presentation. Dow Jones 36,204, down 41 today. Bitcoin 41,579, up 125. So Bitcoin broke above 41,000, and I'll say both Bitcoin and the Dow Jones are within their 52-week, close to or in their 52-week high. So that's important. We talked last week that the Dow Jones can break 36,600, which is close to it. It can usher a new bull market. So watch out for that. Watch out for 36.6 on the Dow Jones. It could happen. Santa Claus rally is already happening, so stocks are probably going to keep going up. Okay, so Bitcoin is up. Dow Jones it took a little break today, but still it's going up. And then I have Roku, so symbol ROKU. They sell the little gadget for the Streamline apps. They have the remote control with the gadget, and then they also have their streaming service. Kind of like Netflix, as far as the streaming service. The little gadget's kind of like the Fire Stick, but I think it's better than the Fire Stick. I always say that. So Roku gives you access to these other apps, Netflix, Amazon Prime, Hulu, etc. So like the streaming service is a big deal. They're bringing the movies, the episodes to your living room. So that's entertainment. So I think it's a good company with a good service. So they're coming back up. Roku was initially, back before the COVID, $490 a share. After the COVID, it came down a lot. And now it's climbing back up 104 today, up 94 cents with a volume of 5.25 million. Just quickly, I want to just talk about that. So the share price being 104 is a good, healthy share price. The higher price stocks are better because they're going up and they're performing. Welcome, David, Pete Lee. Ernie, welcome. Appreciate you. This is Godric here, stock market mentor Anthony. Talking about stocks on Monday night, Tuesday morning. Okay. Higher share prices are better because they perform by going up. So keep in mind, don't be afraid to buy a high price stock. We have also one next is Chipotle, so that one's really high, but I think I think it's fairly valued. Um, you know, like fine wine costs more. Gold is more is more expensive than lead. The stock shares are going to be better. The higher price shares are perceived to be more valuable. Penny stocks are perceived to be garbage, right? Higher price stocks, Apple 190, you know, um, in this case Roku 104, they're perceived to be better because they're higher. They've gone up, they perform by going up, so they prove themselves in that way. Welcome, welcome. Appreciate you guys. Uh, okay, so next stock is, I'm going to go over these and then we're going to talk about the cover call. Okay. Next one is Chipotle, symbol CMG, $2,219 a share, down 14, which is no big deal, by the way. Volume 168,000. So, I like to have about 2 million volume. Volume is important because it is a lot of volume on the stock per day. That indicates a lot of traders, a lot of investors in that stock. And when that stock share price dips, for example, all those traders and investors are going to come in and buy that stock for less. They're going to bring the price back up, and that's going to save your ass. And that's why you want high volume. Stocks with low volume, I would stay away from them. My threshold is about 2 million a day. A lot of stocks have more, but like with Chipotle, we have to use perspective because the share price is 2,219, right? So what I say is, if you have a share price of, let's say, 2,000 or 2,200, that's 10 times bigger than a $200 share price or a $220 share price, right? And because the share price is 10 times bigger, the volume also, in perspective, can be 1/10. So in this case, 1.668K or 168K. Average volume on Chipotle is average volume on Chipotle is 238K, and so you multiply that times 10 because we multiply the share price times 10, and that gives you 2.3 million. So it passes for the volume test. And then the last one is Skechers. I just pulled up Skechers, sorry, a little faster. Um, Skechers SKX, 59.83. Chipotle does the, I don't want to say Mexican food because it's not really Mexican food, but they do burritos and they do burrito bowls and tacos. Kind of like the organic McDonald's. Initially, McDonald's owned them and they sold them off, but like they're opening like new stores like crazy. And I want to tell you about the market cap on Chipotle. It just hit 60 billion. Okay, so that's good. But back on Skechers, okay, 59.83. And Skechers does shoes, they do clothing, right? Skechers, at least they have a product. Like when we talk about stocks, I want you to know that when you select a stock, you gotta be able to buy their service or product, right? So I would say Netflix is good. We can get a Netflix stream for $20 or for $14, right, a month. If I say Roku's good, you can get the Roku little controller, little gadget, the streaming service. If I say Skechers is good, you can buy Skechers shoes. So you need to be able to get to the product or the service pretty easily. If you can't do that, I would avoid the stock. So obviously, like McDonald's, Coca-Cola, these products you can buy easily everywhere. Pepsi, Hershey's, Apple, right? Apple iPhone, Nike products, shoes, apparel. So be be selective in your stocks. Make sure you can buy the product or the service. That's one of my criteria. I like to have that. Okay, so Skechers volume, 1.725 million. but the average volume is about 2 million a day, so it passes on the volume. Okay. I brought up Skechers here. I wanted to show you it's within its yearly, also all-time high. So like think of it like it's going up. Okay, you see like bottom left, top right going up. You want to look at the trends. You want to look at the trends for your stock. And if the stock is doing great, it's going up. The the investors are making money. So you're looking for that. The stock's going down, there's probably red flags, there's something going wrong. But over time, let's say 3 years, 5 years, the stock should be going up, should be making money. It should not be going down. So that's another criteria. Um, share price, share price, check. Okay, $50, $100 share price. Okay, minimum. Volume, 2 million per day. Volume, 2 million per day. Check. And then, can you buy the product? Can you buy product or service? Check. Okay, you got 1, share price, 2, volume, 3, product. And then 4, we're going to go market cap. Market cap. I'd like to have 50 billion as a market cap, but I can't always get that. We have what we call growing companies, small growing companies. Shaquille, welcome. David, welcome. Appreciate you. Thank you for the likes. Give me some likes. Get some people in here. Enough likes will get more people in here. Also some shares. Appreciate you for doing that, liking and sharing. So we talked about 4 criteria. We talked about share price, $50 or $100. Volume, 2 million a day. If you can buy the product or the service. And the market cap. I'd like to have 50 billion market cap, but I don't always get that. For example, like Chipotle is at 60 billion right now. And so that's great. But I was with Chipotle when it was 15 billion. So that was taking a risk because it's growing from a small company to, like, let's say a mid-sized company. And that's like, there's magic there. When you have like a small company, it breaks out into the big boys, a whole new plateau. Then they've achieved something. Like, you don't want to have a company that's so small that it'll get like destroyed in an economic downturn. Kind of like the COVID, for example. A lot of companies lost it in COVID. A lot of small mom and pop companies went out of business because they couldn't survive under economic strain. Chipotle did fine, though. Other companies did fine. Starbucks, Amazon. You ended up like making more money for them because being like a lockdown catered to those companies that deliver food, deliver products to you, so you don't have to go outside. So like some companies, really thrived in a lockdown or an economic downturn, and those companies obviously are better because they can adapt. They have the ability to adapt in an economic downturn. So keep that in mind. And then like on the 5th criteria, I like to say 3 to 5 year chart. It's going from the bottom left to the top right, 3 to 5 years. So those are 5 criteria today I want to talk about. There's other criteria. I have generally 10 criteria. Welcome, Goat. Welcome, Timothy. Dolly. Welcome. Appreciate you. Give me some likes. Give me some shares. Get some people in here. Doing stock market Monday, Tuesday in this case. Early Tuesday morning, 2023. I want to talk about 3 stocks: Roku, Chipotle, and Skechers, which I like all 3. I recommend. And I'm going to talk about the cover call before I finish tonight. The cover call is where you can make money monthly. You basically rent the stock to the public every month for income. Here's Roku, 104 plus 94. It's important, like, when you get a trend, You see that? You see that? That's a trend going up. Like if you look at the top. So right now Roku's in play. I think it'll probably go to 116, 120. So you buy it now, you'll probably make some money. But like I say, like it's nothing's guaranteed, and there's risk in the business, there's risk in stocks. But like if you can identify a trend, right, you can ride that trend. I think it'll probably go to 120. Let's say I'm just say by April, but probably sooner. But by April, give it a few months. Calls obviously are risky, but a lot of people I know making money on the calls with by the call, which is a leverage option. Call option is a leverage over the stock price. Leverage can be like 3 times, 8 times, 10 times leverage over the stock price, depending on the option. If you want to know about options specifically, message me, contact me. I'll do what I can, answer your questions. Welcome, Chosen. Welcome, Scott. Appreciate you, Android. Welcome to my live doing stock market Monday night, Tuesday morning, 2023, December 4th, 5th. I think the market's healthy. I think stocks are going to keep going up. I think we're going to have like a Santa Claus rally probably till January. So I think it's okay right now. I know there's a lot of tension in the air about Brexit, about changing over from the dollar. But what I see is a peaceful transition. I don't see problems really. Um, you know, Anyways, good stocks tend to make money and they tend to go up over time. Even if we have a correction, I would say stay with your good stocks. I think it'll be okay. If you're doing covered calls, for example, you're going to be okay because you're making money monthly, percentage, 3%, 4%. I want to get into that next. If you can write your cover call, I'm going to show you. I have my account at Schwab. It was at TD Ameritrade. Went to Schwab because they took it over. User, welcome, appreciate you. Give me some likes. John 8, I know I said that wrong. Give me some likes, appreciate you. Stock market Monday nights. Okay, so if you don't have a stock market account, I would go, or if you're not happy with yours, I would go Charles Schwab. They seem to have all the bells and whistles from TD. They seem to have all the customer service from TD, which is to say that you can access your account 24/7, 365 days a year. You get a stockbroker on the phone, walk you through all your questions, walk you through your account, and any issues coming up. They have those people there to guide you, to help you. Could be anything. Could be an issue with your trade or issue with your account. And unlike Robinhood, they have stockbrokers and stock market specialists to assist you with any issues you have, and that makes all the difference. Okay, so no to Robinhood, but yes to Charles Schwab. Check it out. They have an app. Okay. Cover calls. Cover calls are where you get 100 shares minimum, and that's one contract, 100 shares. And you effectively create the option. You rent out your stock, create an option. You sell your option to the option market, and you generate income. Okay, so what we do, like in this case, Roku. I started Roku. If you buy 100 shares here, or behind 100 shares at 104, that's 10K, $10,400. Okay, so write that down. 100 shares of Roku, 10,448. You don't have 10K, sell all the shit in your garage. Save like it's a religion. Because I'm going to show you how to do a little business right now. So get 100 shares of Roku. And now on your Schwab account, and this one is actually TD, but same idea. You're going to pull up the option chain. Here we go. We went January, so it's December, so we go January. If it's in January, we go February. So we go about a month out. But like really, because it's the 4th, it's really like 6 weeks. So in this case, it's 6 weeks. But which is to say that you're going to get a little bit more money, but normally you're just doing monthly. You're doing monthly cover calls. In January you write February. February you write March. Okay, in December you write January. So, but the 6 weeks is important because sometimes you want to wait to get the right price because your stock is down or up, for example. So you can always do a cover call, but if you do 3 to 7 weeks, that's kind of like on the monthly system. So 3 to 7 weeks out, for example, is going to get you the basic monthly return. And why monthly? Because your bills are monthly. Your car note is monthly. Your electricity, water, power, food, these bills, mortgage, rent, they come up monthly. So I like to teach you guys what are we doing? Retiring into the stock market, paying our monthly bills, writing cover calls, for example, trading, paying our monthly bills with our stock market account, generating money, and ideally, if you do it right, retire into the stock market. Welcome, David. Thanks for the likes. Appreciate you. David, you have a question. I will try my best to answer your question. Beans, welcome. Roland Foster, welcome. Jessica, welcome. Stock Market Mondays. Godric here, your stock market mentor. Hotter in person. Love that. Michael, welcome. Brian, welcome. So here behind me is the option chain. Don't get confused. This is all like at your fingertips when you have a stock market account. Okay, so look at the share price 104. Let's just say 105. Here's in the middle is the strikes. Left side call options, right side put options. We're gonna do calls today. Don't worry about the puts. We're writing a call. We're selling a call. We have 100 shares. We're selling a call every month to generate income. Here it tells you what you get paid. You pull up the option chain for next month, January. In this case, the third week. It tells you what you get paid. So we agreed to sell the stock. I'm going to say 110. I circled the 110. The bid's on the left side. That's what you get paid. The ask is what you pay, but in this case, we're selling, so we have to do big. 510. That means we agree to sell the stock at 110. Stock's at 105. Like, buy the stock here at 104.48. Agree to sell it at 110. Get 510 per share or $510. So remember, we're investing $10,448. You get $510 because that indicates 100 shares or one contract, and that's your income. In this case, per 6 weeks, or 1 month. Okay, so like 510 income a month. I'm going to say a month, but it's not really a month. For a 10K investment, let's do the math. 510. Watch what I do. Write this down. You have a journal. Write this down in your journal. 510 divided by share price of or investment of 10,448 equals 4.88% return. 4.88% return. Okay. That's a great return. You don't get that return for most stocks. Roku is good. It's hot. It's in favor. It's going up. What is it? Blue Horseshoe loves Roku. I told you. You heard it here first. All right, so we can do the monthly on this. I know it's really 6 weeks, but same idea. Like if you break it down by the share price and by the bid, like so you can go with this 510.1 divided by the share price of 104.48, which is your investment. And you're still going to get 4.88% return. Let's just say 4.9, close enough. Now, why is this important? Because with a 4.9% return, that gives you $510. Okay, it's right there. That pays for your car note, pay for your food, for example. So here's your business. You invest $10,400, get 100 shares of Roku, Write the cover call every month. In this case, $500. It could be 400. It could be 600. It kind of moves, but roll with it like a roller coaster. Stay with it, right? Um, and that's your little business. And that is the example of a cover call. Okay. Now, um, different mechanics about it, but like if you wrote the 105, you'll get $700, 720. The problem is you don't have any share growth because you agree to sell it 52 cents higher or $52 more. Not really enough for share growth. I told you to sell the 110 or to write the cover call 110 because this allows you to get 5 full points of share growth in the sense that the stock shoots up to 110, and it will. Just throw it out there. You're going to get $500 more in the share growth of the stock, plus the $500 in the cover call for $1,000. So really, you're going to be at $1,000, right? So good becomes better. Great can still do better, right? What could happen though is the stock can just stay the same price; it doesn't go up. In which case, no share growth, but you still get your premium. You still get your income of $500, $510, and that's why that's good. They say a bird in the hand is worth two in the bush, so it's better to have something for certain than try to go for something more and not get it. So just it's your philosophy. You have to have a goal, a plan. In this case, my plan, I'm telling you, get $500 a month on Roku or any other cover call stock or investment. In this case, 4.8%, 4.9% return, and that's desirable and that's good. Welcome, Jennifer Jones, Das. Thank you for the likes. Did that make sense? Just real quick, again, get 100 shares of a stock, pull up the option chain. Not every stock has an option chain. Most do. If it's a 2 million volume a day, it will have an option chain. Most of them do, not all. If your stock doesn't have an option chain, it's not a cover call. It's not a cover call requisite. It's not a cover call stock. But Roku is, so ROKU. Okay. Here is market cap 14.8 billion. So Roku is a small company, so there is risk. Not saying it's established. It's not. It's no Netflix. It's no Apple. It's a small company, so there is risk. 14 billion is kind of small. I like to see 50 billion, like I said. So keep in mind that, come 5 years, 10 years, then maybe there'll be no Roku, and maybe this is like a short investment, and you have to look at the long term. Are we going to be in this company? We're in it now. Are we going to be in 5 years, in 10 years? I guarantee you, Apple will be here in 10 years. Netflix will be here in 10 years, guarantee you. But Roku, we're not sure. It's still growing. Has room to grow. It has to establish itself. Okay, so let me move to Skechers. Want to do Skechers? The value of Skechers is that it's only $59. Let's say $60 a share. So in this case, $6K investment. 5,983 to be exact. Gives you 100 shares of Skechers, SKX. Here's your little business. And pull up the option chain. Look at this. We have to write the 60. It just works that way. Unfortunately, not a lot of share growth, but you're going to get $2.15. See that? So $2.15 per share, or $215 per 100 shares, or per one contract. Like on Roku, you can get obviously 2 contracts. 200 shares, and then you write 2 cover calls. Skechers, you can write, 1 contract, 2 contracts. Every contract will cost you, in the sense that you got to have 100 shares, will cost you about $6,000. $6,000 is a lot better. It's a lot cheaper than $10,000. But the return's different. You're going to get $215 dollars So that pays, that pays like your electrical bill, your gas bill, right? Let's do the math, okay? Write this down. 2.15, just like it says, divided by your share price, that's your income. 59.83, 59.83, and we get 3.59, 3.59% return. Let's say 3.6. Not as good as Roku, 4.9, but let me tell you, Skechers is not as hot as Roku. It's not on fire. However, it's cheaper. They have shoes. I mean, shoes are not as pizzazz as Roku Stream. It just doesn't work. But they have a valuable product. They have a trend. Like, did I show you the Roku trend? Not Roku, Skechers. Sorry, they're going up. Wow, look at that. I'm going to say all these stocks I'm showing you are either within their 52 high or all-time high. So going up, they're hot, they're in play, right? Okay, so Skechers, you see the trend going up. All right, going to give you 3.6% return on your money. In this case, in 6 weeks, but you can write the cover call every month. Any questions on that? So again, the option chain, I don't want to confuse you guys, but this is important. The middle is the strikes. You agree to buy the stock here at 59.83. You agree to sell it for 60, and you're going to get 215. Divide that number by the share price, you're going to get your return. In this case, we're going to do a monthly cover call, and if you're going to get $215, that's going to pay for some bills. So that's Skechers. And let's do Chipotle, then we'll be done, okay? Selling puts on Coinbase. Nice. Jennifer, appreciate you. Jennifer Jones. Selling puts, guys, is also a long position because you're agreeing to get, and it's similar to selling a call. You're selling a put, but that's also a long position similar to, selling a call technically is a short position, so I want to explain this to you. But if you're doing cover calls, it's technically long, and I'll tell you why. Because you have the 100 shares, that's your base foundation. That's like your business. You're selling the calls, you're selling the upside, you're giving that away, okay? But, and that's a short position. But because you generally want the stock to maintain the price or go up, you want the stock to go up generally because you can get some. If you have a Roku at 104, you agree to sell at 110 for a premium of $5 or $500. You're going to get a share growth of 5 points going from 104 or 105 to 110. So you want the stock to go up. You want to get the premium. Okay, so anyways, I like naked puts also, and also a long position. Okay. Back to when do Chipotle. Selling options is great side hustle for folks who don't have much time. Thank you, David Lima. Appreciate you. Hey, definitely follow. I'll talk to you more. I have some stocks you want to look at. I'm not going to tell you today, but by next week we can talk. Okay. Now here's Chipotle. The organic McDonald's. Okay, now don't be afraid to buy a $2,000 stock. We talked about getting 10K for Roku, getting 6K for Skechers. You're gonna need 200K for Chipotle. But look, man, like a lot of you guys have like $1 million in your house. If you have a house, that's more than 200K, 220K. So like, why not have it in? You have money in your house. Why not have it in the stock market, right? So $2,000 a share, $2,200 a share times 100. Do your math. Got your calculator. 2219 per share times 100. Your investment needs to be $221,900. 221,900. Like I said, higher price stock is good because it went up, because it performed by going up. And let's look at the cover call on Chipotle. Option chain. So you have a couple choices on here. I'll give you two choices on here. So if you buy the shares here at 22.19, first thing I would probably do, depending on the trend of the stock, but I like to do what's called a sweet spot. When you do a cover call, you buy the shares at the market, for example, and you write the cover call. You find the sweet spot, which is when the premium that you're going to get paid is equal to the share growth that that you'll get. The stock goes up. In this case, look at this. Let's say 2,220, right? Round it up, and then we're gonna sell the 2260. So that's going to be 40 points of share growth we can get in the stock, right? But not more, because we give away the upside when we're at the cover call, right? And for that, we get 43 points, or $4,300 for 100 shares. So let's do the math, okay? 43 divided by the share price of 22, which is the premium right there. I circled it. Divided by 22.19. I'll put the cents in there too. 22.1920 equals 1.93%. 1.937%, which is really 1.9%. Not great, like half of what, less than half of Roku, less than you get at Skechers. But you know what? If you're looking at quality, right? Chipotle is going to be a better quality than Roku and Skechers, because it's bigger. It's more. It's a bigger market cap. It's more established. Like other reasons, like Chipotle has profits. Roku is not showing a profit right now. Different reasons, but in this case, we're exchanging premium for stability. What I want to say, right? Like if we do Apple, also Apple gives you like 1.9 a month or 1.7 a month, but like doing Apple, right? You're getting less premium, but you're gaining stability because it's more of a stable stock, right? So keep that in mind. A lot of these stocks that have no PE, which means they're losing money, or other problems, will tend to pay a high premium. But you're going to go on a roller coaster ride, right? So think of exchanging, in this case, premium. You get less premium, but you're getting more of a quality, stable stock. In this case, Chipotle. And I wanted to show you if I can find it. Where's my effects? Well, up here, it's right here. You see where the strike 2240. So instead of selling 2260, you're going to sell the 2240, and you're going to get 5260, which is a better return, a better premium. So 5260. Let's do that math on that. If you write the 2240 cover call for Chipotle, you get 5260. 52.60 divided by share price of 22.1920. 22.19.20 equals, now we're at 2.37%. 2.37%. So better than 1.9. We're getting less share growth. But like I say, the share growth is never guaranteed. It's just there, but if the stock doesn't go up, you didn't get the share growth. So in this case, we can get 20 points of share growth and still make 552 points, which is $5,260. So like to review, like with Roku, you're gonna invest 10,400. You're making $500 a month. With Skechers, you're investing 6,000. You're making $215 a month. And with Chipotle, in this case, you're investing 220K, 220K, which is like $250,000, which anybody who has a house has that in their house, and you're getting $5,260 a month, and that honestly like can pay your bills every month, and that's why cover calls are good. See, welcome. I appreciate you guys. Godric here, your stock market mentor. So you give away the upside for premium income is your goal to not get assigned. Okay, Lima, good question. Assignment. Okay, so yeah, so you're gonna give away the upside. What I didn't say specifically is when you write a cover call, if the stock happens to shoot up, you're gonna give away that upside. You're not gonna be able to get paid in this case with Chipotle. You only get paid to 22.40. If it goes, let's say, to 3,000 a share, you're gonna give all that money up to get your $5,200 a month. Yes, that's true. In that case, it'll be assigned, and it'll sell for 22.40. You'll get your cash. Now you have cash and no shares because that option buyer assigned those shares, and you made your money. You're gonna make the 5,200 plus 2,000 more points because there's 20 points there on the share growth, $7,200, and you gotta be happy with that. I don't like to be assigned, but it's always a possibility. When I write my cover calls, I set it up so you have some share growth and some premium. That's always to me it's the best method. It's my philosophy. I want to get both share growth and premium. Sometimes you are assigned, and what happens is we have to buy our shares back for higher because it went up, and we just do the next cover call, or we wait. We say, well, maybe it can come down. We got assigned to Chipotle. We lost our shares in Chipotle, and then we sold them. We can go to Skechers, or we can go to Apple, or we can go to Netflix. Move around. We move around. We have a core. Oh, by the way, I always have a core 10 stocks list. So you have 10 stocks you can really get behind. You focus on the stocks. You study. You cover them. You're trading these stocks. You're reading the news about them. It's much better to focus on 10 stocks than to try to do 100 or 1,000 stocks and not do that very well. So in your core 10 stocks list, if you wrote, let's say, Chipotle or Roku, and they got assigned and it got away from you, you can always move the money around. You can move it to Skechers. You can move it to Starbucks, or you can move it to I like to do NVIDIA. I do Palo Alto Networks. So it's no big deal if you get assigned and you sell the shares. What I like to do, I try to get those shares back. I write the next cover call. But sometimes, if it got away from me, if it's really high, I'll just go into another stock and write the cover call. You still have your money regardless. You don't lose the money. You might, in a sense, lose your shares, but you still got all the money. You can just either buy them back for more, or you can buy another stock. That's what I do. I can jump around. Do you close CC in profit when you're made 70? Good question. The first lesson is to let it expire, to don't buy it back, because then you're looking at your income. You're looking at hopefully some share growth. When I do a cover call, I always want to do share growth. So I'm writing the strike above the stock price. So I'm going to get some share growth and some premium. So in that way, I'm going to be sitting pretty. If I can make 5% a month, 7% a month, 3% a month even, I'm happy. I get my bills paid. I'm good. Just let it get taken and wait, and then reevaluate come that Monday, the next Monday after the triple witching, reevaluate and do another trade. But sometimes, I don't want to lose my shares. Like with Netflix, for example, at one point I had 700 shares. Now I only have 200 shares because it just got away from me. But meanwhile, I'm making the money all the while. So what you'll do, you'll buy back your cover call when it's at a profit mode, 78%, that's fine. You'll keep the shares, and you write another cover call. So in essence, you're giving back money right? But you're holding on to your shares, so it's a give take. Um, the first lesson is don't do that because you're giving your income back. But the second lesson is if you're an advanced trader, if you are not if you're going from a novice trader to a medium to advanced trader, you're going to realize that it might be beneficial to pay money to hold on to those shares and to maintain those shares and to keep running the call, giving just a small money back, than to have it get away from you, maybe missing the big move. That's why. Make sense? We're going to wrap. Are there any further questions? So that in mind, what do you split between money in your CC? What do you split between money in your core 10 and cash selling CC? I'm not sure I get your question. What do you split? What do you mean what do you split? Manny Spinners, welcome. Appreciate you. Give me some likes. Give me some shares. I did throw a goal up there. No worries. But if anybody got a golden nugget tonight, you can throw on. I don't know, something. I don't mind. But it's just I like TikTok. It's my new platform. So 50% invested in your core 10. I have 100%. Oh, you mean cash? I do 90-10. I do 90 invested, 10 cash. I generally do that. And then when I see a trade, I'll use that cash, right? But when I use the cash, I have to sell something. I have to sell my weakest position to get that 10% cash back. So if I have 100K, for example, I'm going to put 90K in, mostly in cover calls, but different stocks, dividends, maybe some trading. But I'm going to put it in stocks, for example. And then I have 10K cash. And I just have that cash there because it's always nice to have some cash flow. And if I see an opportunity, I got some cash ready to handle that. But when you use that cash, you have to sell your weaker position to get that cash back. So it's that's how I do it. I have like 90% invested in my core 10. UPS 30 call. You see it going this week. UPST. Let me see if I can pull. We're gonna close, but let me see if I can pull up. Let's see. I said to pull it up on my computer. UPST. Is that UPS? I can tell you what I think about it. I think if it's going up. Because of the time, it might be uploading, which is to say that it may not let me log into. Okay, let me see if I can do this for you real quick before we close. UPST. Upstart Holdings. Upstart. NASDAQ. $33 a share. 33.65 down 64. You there? Call. You have a 35 call. What on your call? What's your expiration on that call? Okay, so the good news is the stock is coming back. It looks like Roku. It had a high of 67 back in 23. Back in August, and it's coming back. It went down, coming back now. I see it going up. Um, what is your Manny? What is your call expiring? When? Um, Hopefully it's not next Friday. Hopefully it's in January or April. Um, I see Upstart going up. Um, I have time to do the whole. Let's see. What else? Schwab has a lot of bells and whistles. I haven't really used the site much since they transferred over. Okay, so anyways, what I see looks good. We can do like the five. Why don't you do the five? Like do the five criteria on Upstart, and then we can get back for next week. I can do that for you. You know the chart, the 3 to 5 year chart, for example, is fine. So check volume, 2 million a day, volume, market cap, 3 year chart. Can you buy the product? What does Upstart sell? What do they sell? Can you buy the product? Can you buy the service? And then the share price. Share price, unfortunately, is too low, 33. So not a candidate for that, but maybe it'll get better. I was doing Skechers when it was $33. I was doing cover calls on Skechers back when in the day at $33, but now it's 60, so I went up. Thank you guys. See you next week. Appreciate you. Godric out, your stock market mentor. Write some notes for today. We did 3 cover calls. We covered Roku, we covered Chipotle, we covered Skechers, covered your percent return. Like, if you just multiply that return times 10, you can get that in a year. In theory, on paper, you can get that in a year. You retire to the stock market. Godric out.